Hello guys, welcome back into the channel. Please make sure that you like the video and subscribe to the channel if you haven't already. And just also make sure that you are engaging us in the comments, whether you want us to look at a specific question or you have anything else to say maybe about some of the things that we have covered in this video. And a special shout out to all our members. Just remember, guys, that you can join the membership of this channel and you will get exclusive NBT content that is available only to members. And yes, and there's lots more content that is coming in that is going to be available for our members in accounting, in maths, as well as many other subjects. So just make sure then that you join the membership for a small price of 149 per month, and then you can be part of the family. Anyways, without further more to do, let's get straight into today's question. We're going to be looking at is the cash flow statement and financial ratios. Again, remember that this is from November 2023 paper, and we're going to be looking at these questions. So it says here that the information relates to Shareholders Limited for the financial year ended on the 28th of February 2023. And then in the required, we need to do a ordinary share capital note, and then there's other things that need to be prepared. All right, so let's jump straight then into the ordinary share capital note. So in the answer book, we've basically been given the balance at the beginning, and then there's the transactions that did occur. All right, so let's have a look now and find the information relating to ordinary share capital. So if you look at the first initial information, you can see that 1 March, that would be the first day of the year. Then on the 30th of June, there were 300 additional shares that were issued, but it was not mentioned at what price. Okay, so if it's not mentioned at what price, we're not going to guess it. We're just going to put the number of shares that were issued on that particular date. So that's going to be 300,000 shares. Okay, cool. Then we have the next information on the 1st of December. So on the 1st of December, what does it say? It says that 90,000 shares were repurchased from a retired shareholder. He was paid zero point 0.8 above the average issue price and would no longer qualify for dividends. Okay, so again here we don't have the average issue price because when we are doing the repurchase of shares in the ordinary share capital note, we want to get the average issue price and then multiply by the number of shares. But we know how many shares this is. So we're going to say, well, minus 90,000 shares. So we can basically work out at least one side here, which would work out to 1,410,000 shares issued. So we're going to say shares issued or in issue on the 28th of February 2023. So that would be on the last day of the year. Okay, let's look at some of the information that we're given then that can assist us to get to the point that we have everything filled in. So if you look at information B, it says from the statement of financial position, we're given ordinary shareholders' equity, but we're also given ordinary share capital at the end of the year, which is 9,306,000. So then we would know that at the end of the year, this is 9,306,000, and then we need to basically figure out, well, how much came in terms of the shares issued, and then how much came out as a result of the shares that were repurchased. Now, we can say that, so shares repurchased on 1 December 2022. Now, what we need to do is basically work out the average issue price. Now, if the repurchase happened and it was the last transaction before the end of the year, then in that case, we can simply take the balance at the end and use it to calculate the average issue price. So the average issue price of these shares is basically what? 9,306,000 divided by 1,410,000. So that works out to 6.6 as the average issue price. So then our average issue price, we're going to say, well, repurchase on 1 September at 6.60, and then we can just say that's our average issue price. Okay, so then if that is our average issue price, we can then basically take the 90,000 and multiply by 6.6. So 90,000 multiplied by 6.6. So that works out to 594,000. Now let's remember that this would be negative, right? Because it would decrease our share capital. And then we would be left just with one amount to basically fill it out. And this happened on the 30th of June, 2026. So we can say shares, okay, let's keep it consistent. Shares issued on the 30th of June, 2022. And so we would need to basically work out the difference. So we're going to take the balance at the end, and then instead of saying minus 594,000, we're actually going to add that 594,000, and then we're going to subtract the balance at the beginning. And so that works out to 2,700,000. So that would be what we issued the new shares for. We issued 300,000 shares and we raised 2.7 million. And that's pretty much the end of the ordinary share capital note. And then let's move into the next question. Now, the next question, as you can see here, it asks for cash flows from operating activities and then cash flows from investing activities. All right, so let's start with the operating activities. Well, the cash generated from operations is already shaded, and our total for operating activities is shaded. We're given the interest paid, and then we need to do the rest. So we're going to start with SARS income tax, or not SARS income tax, but tax paid. So we're just going to say tax paid. And now for the tax paid, let's have a look then at how we can do that. So the first thing that we're going to look at is basically SARS income tax at the beginning and at the end of the year, and then we also need to know the what do you call this? The income tax expense for the year. Okay, so let's start with the SARS income tax at the beginning and at the end of the year. So you can see here that we have 42,500, which is debit, which means that at the beginning of the year, SARS would have owed money to the business. All right, so then that would be a positive amount, right? Because this isn't money that is coming that would be paid by SARS during the current financial year, because they would have owed us this amount when the year started. So then for tax paid, I'm going to open entire bracket. Now I'm going to write this amount as a positive because it is a positive amount. We can even put a plus in front of it just to make it clear that this is the money that came in, because SARS was owing us money, and so they paid us the money during the year, and so that would be a positive amount. The next thing I want to look at before I look at this 27,800 is basically the income taxation for the year. So let's see. So it says here that net profit after tax amounted to 912,500, and then income tax is at 27% of the net profit. So this means that then this would be what? This would be 73%, and this would be 27%. So then to work out income tax for the current financial year, I'm going to work it out on the side that the income tax is going to be 912,500. So 912,500, and then you're going to multiply by what we're looking for. We're looking for 27%, and then we're going to divide by what we're given, which would be 73%. So then we divide by 73, and that gives us a SARS income tax amount of 337,500. So for this, all the time when it comes to the income tax, I pretty much just subtract this amount. And then after that, we look at the end of the year to see if maybe we owe SARS or SARS owes us. But as you can see here that, well, we owe SARS now the 27,800. Now this is at the end of the year. So if we owe SARS this amount of money at the end of the year, it means that not all that 337,500 was paid. And so since not all of it was paid, we can just simply add how much of it was not paid. And so how much of it was not paid is the 27,800. So we're going to have 27,800, and you can see that those are, you can see how we did, our positives as well as our negatives. So then for the tax paid, we would have an amount of working out to 267,500. Let's do this. Needs to be negative. Yes, there you go. 267,200. And then the other thing that you need to then look out for when you're doing the cash flows from operating activities is dividends paid. I said shareholders, but it's dividends paid. So in this case, obviously, we'd look at, well, the shareholders for dividends at the beginning of the year, and then we also want to look at the interim dividend within the current year. So shareholders for dividends, well, let us have a look. So let's have a look then. We're going to start with, sorry, let's start with shareholders for dividends. Let's look for shareholders for dividends. You can see that it is a question mark. It's not given, and this is part of the amount that would have been paid. Okay, so that's not giving us much, but we have some information that we're able to work with here because we have the information in E, which gives us the dividends. So it says dividends and earnings per share. So final dividends per share, 28 February 2022. So this is the end of the previous year, which works out our shareholders for dividends in the previous year was 24 cents. And then how many shares were in issue? Well, we do know how many shares were in issue because in our answer sheet, we're already given that there was 1.2 million shares that were in issue when the year started. So then in that case, when we work out dividends paid, we start off with the shareholders for dividends that relates to the previous year. So that was 24 cents. So I'm going to say 0.24. Then I'm going to multiply by 1.2 million. Right? And then after that, you're going to look at the current year's interim dividend because that's what would have been paid in the current year. So then here it says that interim dividends were paid on it's 30 cents and they were paid on 31 August 2022. So 31 August 2022, it says all shareholders in the share register that financially and qualify for dividends. So we're looking at 31 August 2022. We need to see, well, how many shares were issued then? Well, the number of shares that were issued then would be the shares that were there at the beginning of the year, as well as the shares that were issued during the year. So basically, then during the year, we would have issued an additional 300,000 shares added to the 1.2 million. But remember that 1 December only comes after this dividend was paid, so we won't subtract the shares that were repurchased. So we're simply going to take 30 cents and then multiply by 1.5 million shares. So we're going to say, well, plus, it's going to be 30 cents, or 0.3 multiplied by 1,500,000. So then for our dividends paid, we would have a total of how much? Let's say this works out to, okay, let me put the equal sign there. 738,000, and that pretty much concludes our shareholders for dividends. The next thing that you're going to look at is cash flows from financing activities, and you're going to start with proceeds from issuing shares. Well, from issuing shares, we already have that amount because we already worked it out in 2.1 and it would be 2.7 million. That's how much was raised from issuing shares. Then the next thing that you're going to be looking at is the repurchase of shares. Well, let's think about it. So 90,000 shares were repurchased, and these shares were repurchased at 0.8 above the average issue price. Now we know that the average issue price was 6.6, right? And we need to actually be multiplying here. So we're going to multiply by 6.6 plus 0.8 because 0.8 will add to the 6.6 because we repurchased these shares at 0.8 above the average issue price. So then it's going to be 90,000 multiplied by 6.6 plus 0.8, which is about 7.4. So 90,000 multiplied by 7.4 will then give us 600. Will give us 666,000. All right, cool. And then after that, we're going to look at the loan. So let's look at a change in loan. Now, we could have paid this loan back, or we could have maybe taken an additional loan. So let's look at the information regarding the loan. So, loan statement. So it says here we have a balance 23 February. So this is the balance at the end. Okay. So this is how I want us to look at the loan. We want to look at the loan. So we're going to start with the loan balance at beginning. And then if the loan was paid, so we're going to look at the repayments, including interest, because the repayments are all usually given. And then after that, you want to take out now the interest that we capitalized. And then we have the balance at end. Now, key thing here is that the amount paid towards the loan is basically covered within this part. So this part here is going to give us the amount paid. So we know that the balance, well, let's look at the balance. So we're looking for these two amounts basically when we're looking for the amount of loan that has been paid. Because in this case, it's a repayment of a loan, because you can see there's no mention of a loan being taken, but rather the payment. So the interest capitalized is 117,500, and the monthly payments including interest is 22,750. So we're going to say then, well, 22 750 multiplied by 12. That gives us the amount that was paid, right? And then we have an amount capitalized in terms of the interest. Well, what is the interest capitalized here? Well, the interest capitalized is 117,600. So 117,600 is capitalized. So if you look at this payment then, sorry, I think I messed it up. So this is supposed to be the repayments, and then this is the interest capitalized here. So basically then we made payments of 273,000, for which 117,600 were in respect of the interest. So how much was paid towards the capital balance of the loan? Well, the amount that would have been paid would have been 154. So the 155 400, and you can also do this, I think, fairly easily as part of your workings, and this would be something that goes like this. So we're going to have 22,750 multiplied by 12, and then minus 117,600. So that would have been a payment of the loan. So then it would be a negative 154,500. Okay, or 2.3 of this question got cut out. So I'm just going to do it quickly, but I had already answered it. It's here in the answer sheet, and then I'm going to just explain my calculations. So the first question was to calculate the net asset value per share. To do that, you would remember that the formula for the net asset value is shareholders' equity. So you take the total of shareholders' equity, and then you divide by the number of shares in issue at the end of the year, and then you multiply by 100. So if you look at 2.1, we did work out the number of shares. So we divide by that 1,410,000, and then if you go into the information here, you will see that shareholders' equity at the end of the year is 10,200,000. So that's how you calculate, and then you multiply by 100, and then you get 723.4 cents. Then we needed to work out the dividend payout rate. So when you work out the dividend payout rate, you basically look at the earnings per share. So if you have earnings per share, let's look where we have earnings per share, because basically you take your interim dividend per share plus your final dividend per share, add those together, and then you divide by the earnings per share. So if you look at it here, earnings per share is 66.2 cents, and then your interim dividend per share is 30 cents per share, and then the final dividend per share is what was not given. Now, to work out this final dividend per share, we would take shareholders for dividends at the end of the year, 282,000, and then we divide by the number of shares in issue at the end of the year, which we did work out here, and it was 1,410,000. And if you do that, you will get that the final dividend is 20 cents. And then after that, you basically take, you say 30 plus 20, which is 50 cents, and then you divide by 66.2%, multiply by 100, and then you're going to get a percentage of 75.53%. This is the amount that has been paid out from the earnings per share towards dividends, which means that the business retained just around about 24%. All right. And then lastly was working out the return on the average equity. So when you work out the return on average shareholders' equity, the first thing that you take your net profit. Now, a net profit was given because we do have the net profit. Let's see in which piece of information where the net profit was. So, okay, you can see that net profit after tax is 912,500, right? So already got that figure. And then we would divide by the average equity and multiply by 100. Now, average equity is basically taking it's basically taking equity at the beginning, which is 7,985,500, and then plus 10.2 million, and then you divide that by 2. And then once you do that division, it's going to give you an average equity of 9,092,750. And this works out to a return on shareholders' equity of 10.4%. And so that would be the end of question 2. So just make sure that you stay tuned in the channel to get question 3 and question 4 of this paper, and for even more papers that are going to be dropping on this channel. So stay tuned, and I will see you on the next one. Cheers.